Hey everyone, welcome back to the channel. I hope you're all doing great today because we've got a ton to unpack about Bigbear.ai, one of the most talked about names in the AI and defense tech sector right now. The company's stock has been holding strong around that $7.50 range, which, if you've been following for a while, you already know has become a major level of support, a price area that traders and institutions have been watching like hawks. So let's jump right into it. Bigbear.ai isn't just another AI company trying to ride the hype wave. Their focus is highly specialized. They're working at the intersection of artificial intelligence, big data analytics, and national defense applications, particularly in the transportation and security sectors. They've already landed partnerships with big names. I'm talking the U.S. Department of Defense, the U.S. Army, and other federal agencies, plus contracts related to TSA and airline infrastructure. Now, before we dive deeper into what's happening under the hood with Bigbear.ai, let's step back for a second and remember where this stock came from. When we first started watching them back in October, they were trading around $1 per share. That's right, just $1. And since then, they've seen a massive move, climbing as high as $10.36 earlier this year before pulling back during April's correction. That retracement took them down near the $2 range. But the recovery that followed has been impressive. They've since bounced back multiple times, recently pulling down from the $9.39 area and once again testing that $7 level and holding it beautifully. During today's session, the stock dipped briefly to $6.96, but quickly rebounded about 9% from there. That shows us the market respects this support zone. Investors are willing to defend that price. Now, I'm not saying this guarantees an immediate rally, but if that floor holds, we could easily see the stock pushing back toward the $9 resistance zone in the short term. Technically speaking, Bigbear.ai's overall chart still shows a healthy uptrend. You can draw a rising support line that's been intact since early this year. Every time it comes down near $7, it seems to bounce, showing that buyers continue to step in. But remember, this story isn't just about technical analysis. This is far more about fundamentals and future positioning. In fact, for Bigbear.ai, I'd say 90% of the story is about what's happening behind the scenes, their contracts, leadership, and upcoming opportunities. So what's driving all the optimism here? First, the company is deeply embedded in AI infrastructure that powers biometric security systems. One of their standout products is VeriScan, a technology that enables facial recognition, identity verification, and predictive analytics for transportation hubs and border control. In other words, it's the kind of AI system that keeps things moving while keeping people safe. They're also leveraging simulation and data-driven tools that help manage logistics and shipping operations, tracking the flow of goods in and out of major ports. For example, they have ongoing work in Panama, helping optimize trade data and analytics through AI-driven modeling. This combination of national security, logistics, and artificial intelligence makes them a unique player in a very lucrative niche. Now, here's where it gets even more interesting. Bigbear.ai isn't just focusing on day-to-day contracts. They're positioning for massive global events coming up in the United States. The 2026 FIFA World Cup and the 2028 Olympics are both expected to draw tens of millions of visitors. With that kind of global movement, the U.S. government and airport systems will need enhanced biometric tracking, threat detection, and identity verification systems, exactly what Bigbear.ai specializes in. A recent government publication confirmed that TSA and Homeland Security are aggressively expanding the use of AI-powered screening and biometric identification. These systems are being designed to replace or reduce manual checks, automate luggage and body scanning, and improve remote security monitoring. Bigbear.ai's VeriScan platform fits perfectly into this strategy. It's already deployed in several major airports: LAX, JFK, O'Hare in Chicago, Nashville, Denver, and Seattle, just to name a few. Their CEO, Kevin McAleenan, brings a particularly relevant background to the table. Before joining Bigbear.ai, he served as acting secretary of the U.S. Department of Homeland Security and also as the Commissioner of U.S. Customs and Border Protection. So when we're talking about experience in counterterrorism, border analytics, and national security systems, this guy's resume checks every box. However, not everything's perfect. One major criticism that continues to surface among investors is the company's communication style, especially during earnings calls. Many shareholders have expressed frustration that Bigbear.ai doesn't conduct live Q&A sessions during their earnings releases. Instead, they use pre-recorded statements, leaving investors with unanswered questions about key financial metrics and contract values. For instance, when they recently announced the rollout of VeriScan at multiple airports, a lot of investors wanted to know, how much are these contracts worth? What's the financial value behind deploying this technology in cities like Los Angeles, Chicago, and New York? Those numbers weren't shared, and that lack of transparency hurt investor confidence, at least temporarily. Now, despite those communication issues, there's still a strong bullish case for Bigbear.ai. They're holding roughly $600 million in total assets, which is an all-time high for them. Revenue has been hovering around the $150 million mark annually, and while net income remains negative for now, analysts are expecting that to shift as major event contracts start flowing in over the next 12-24 months. Some investors on forums like StockMeet have also been analyzing the most recent earnings and pointed out something important. The reported negative net income looked worse than it actually was. When you dig into the details, a large portion of that loss came from non-cash accounting adjustments. For example, there was a $70 million goodwill impairment from older acquisitions. That's just an accounting write-down, not real cash leaving the business. Then there was a $135 million derivative liability revaluation, which again is a paper loss tied to stock options and warrants. If you strip those out, the company's actual operational loss was much smaller, around $10 million, instead of the headline $228 million number everyone panicked about. So while retail investors may have sold off in reaction to those scary-looking numbers, institutions saw through it. In fact, during that post-earnings dip, when the stock tanked from $7.50 down to about $4.50, institutional investors were quietly buying. They recognized that those losses didn't reflect the company's real cash flow position. And sure enough, the stock rebounded strongly afterward. That's a huge sign of confidence from big players. Remember, institutions don't usually gamble on hype. They buy when they see long-term potential. And Bigbear.ai's positioning in defense-grade AI and predictive analytics fits perfectly into the direction government security is heading. Now, the big question for us as retail investors is, what happens next? If the $7 support level holds, and all current signs suggest it will, we could see a continuation of the uptrend toward $9, and maybe even a retest of the $10 mark in the next few months. From a longer-term perspective, the potential tied to global event security, AI infrastructure, and ongoing defense contracts could push this company into a completely different valuation range. But, and this is important, that will depend heavily on execution and communication. If the leadership team improves its transparency with investors and continues landing visible contracts, Bigbear.ai could become a legitimate mid-cap powerhouse within the next couple of years. If not, they risk letting opportunity slip through the cracks. At this point, what we're really watching for in their next earnings report are updates on contract valuations, AI infrastructure expansion, and cash flow improvements. Those are the catalysts that could trigger the next leg up. To sum it all up, Bigbear.ai stands at a very interesting crossroads. On one hand, they've built a foundation in sectors that are about to explode: AI security, border analytics, and transportation intelligence. On the other hand, they still need to prove that their operations can turn consistent profits. The company's leadership has the connections, the contracts are starting to roll in, and the global stage is set with massive events on the horizon. So, whether you're already holding shares or just watching from the sidelines, keep your eyes on that $7 line, because as long as it stays above it, this chart looks strong and the fundamentals keep improving behind the scenes. All right, guys. That wraps up today's deep dive into Bigbear.ai. If you've been following this story from the early days, you've seen the crazy volatility, the massive gains, and the continued resilience of this company. The AI defense market is one of the hottest frontiers right now, and Bigbear.ai has positioned itself right in the middle of it. Let me know what you think in the comments. Do you believe Bigbear.ai can become one of the major AI defense players over the next few years? Or do you think it's still too early to tell? Thanks for tuning in. And as always, make sure to stay informed, stay patient, and I'll catch you guys in the next one. This is not financial advice.